Let me take you back to 2004, the year when I first started trading. I still remember placing my very first trade. It was nerve-wracking, to say the least. Back then, the internet was still fairly new, and online brokerage systems were not as common as they are today. So I had to physically call my broker and give them instructions over the phone to place the trade manually. You can imagine how stressful that was. As a beginner trader, I was terrified I might give the wrong instructions, or worse, that the broker might misunderstand and place the wrong order. Since everything was done manually, there was so much room for error. It was a completely different world compared to how easy and accessible trading is today. Now, things have changed dramatically. With so many options available, how do you choose the right broker? Let's break it down step by step. Number one, you need to understand your investing style. First, it's important to know your investing style. We are long-term investors, not short-term traders. Unlike day traders who buy and sell stocks multiple times a day, we transact much less frequently. So this means we don't need fancy tools or features designed for high-frequency trading. Instead, we focus on brokers that support long-term investing with low fees and reliable platforms. Number two, we need to look at the commissions. So one of the first things to check is the broker's commission structure. Commissions are the fees that you pay every time you buy or sell a stock. So lower commissions mean more of your money stays invested. For example, I personally use Interactive Brokers, which offers competitive commission rates. The next thing to look out for is the live data feed. Consider whether the broker charges extra for live market data subscriptions. As long-term investors, we don't need real-time data because we're not making split-second decisions. Instead, we can rely on closing market data, which is usually free and sufficient for our needs. Number four, we need to look at the regulation and financial strength. This is a big one. Make sure your broker is regulated by a reputable authority. There are many fly-by-night brokers out there that disappear after a while, leaving investors stranded. So do your due diligence and choose a broker with a strong reputation. For example, Interactive Brokers is listed on the US Stock Exchange, which adds an extra layer of credibility. The next thing to look out for is the minimum deposit requirements. So check the broker's minimum deposit requirements. Some brokers allow you to start with as little as $100, while others may require a larger initial deposit. Choose one that fits your budget and investing style. Number six, and this is important for us as Muslim investors, we need to avoid margin trading. Margin trading involves borrowing money from your broker to buy more stocks, which can amplify both gains and also losses. So not only is it extremely risky, but it's also not permissible in Islam. Many traders have lost their entire accounts due to margin trading. It's best to steer clear of margin accounts. When you sign up for your account, make sure to set it up as a one-to-one margin account. This means you'll only be using the money that you deposit without borrowing any additional funds from the broker. This setup ensures you're staying within the halal investing principles while also protecting yourself from unnecessary risk. Number seven, you need to look at the trading platform. The broker's trading platform is another important consideration. Is it user-friendly? Is it stable and reliable? Most brokers allow you to download their platform and set up a demo account so you can test it out before committing any real money. This is a great way to see the platform, whether it meets your needs. For example, Interactive Brokers offers several platforms for you to choose from. Personally, I use their Trader Workstation, the TWS, and also their IBKR desktop platform for my investment accounts. These platforms are robust, reliable, and packed with features that make long-term investing easier. I'll walk you through these platforms in a separate video so you can see how they work and decide if they're right for you. Number 8, we look at the range of products and market accessibility. Finally, think about the range of products and markets the broker gives you access to. Thanks to the internet, we can invest in markets all over the world. For example, Interactive Brokers provides access to over 160 markets in 36 countries, according to their website. And as long-term investors, we'll primarily focus on US stocks from the US stock market, as that's where we see the most growth potential. Don't let your location limit your investment choices. Invest where you'll generate the best returns. Before we end this quick session on choosing the right broker, I just want to share some thoughts. I've learned quite a fair bit so far. And remember, the broker you choose should align with your investing style, your values, and your goals. Take your time, do your research, and don't hesitate to test out platforms with demo accounts. I'm here to support you as much as I can on your investing journey, so happy investing!